You just spent 18 months saving for a down payment. You did the research, you checked the MPG, and you finally drove that shiny new SUV off the lot. But then, the first bill arrives. Not the car payment, the insurance premium. And it's double what you expected. Welcome to the new reality of the American car market. Nobody at the dealership warned you, and your insurance agent probably didn't see it coming until the data hit their desks. Right now, there are 15 popular models on the road that insurance companies are treating like high-risk liabilities. We're not talking about Ferraris or Lamborghinis. We're talking about the family haulers and everyday sedans sitting in your driveway right now. In this video, we're breaking down the Torque Hub Insurance Blacklist. We've cross-referenced real-world 2025 collision data, theft indices from the NICB, and specialized repair labor rates to show you why these 15 vehicles are absolute bank account killers. And wait until we get to number 1, because that truck is currently being hit with what the industry calls a physics tax that you simply cannot escape. Let's get into it.
Number 15. Nissan Armada. The problem? High collision loss index. Starting our list is the Nissan Armada. On paper, it's a rugged, body-on-frame beast, but in the eyes of an actuary, it's a massive financial risk. The Armada consistently ranks at the top of the high collision loss index. Why? Because when this 6,000-pound SUV hits something, it doesn't just fender bender, it obliterates. Insurance companies look at the sheer weight and the body-on-frame construction. In a collision, the Armada's stiff frame often transfers energy in a way that causes luxury-adjacent repair bills. We're seeing average annual premiums for clean drivers hitting $2,700 to $2,820. It's not about tech failing or being stolen, it's just pure economics. These things are expensive to fix, and even more expensive for the insurance company to pay out when you hit someone else. Number 14. Toyota Sequoia. The problem? Hybrid complexity and specialized tech. You probably think Toyota means cheap to own. That was true for your grandpa's Land Cruiser, but the current generation Sequoia changed the game with the iForce Max hybrid powertrain. When you get into a front-end collision in a new Sequoia, you aren't just replacing a bumper and a radiator. You're dealing with high-voltage battery housings, integrated electric motors, and a cooling system that's twice as complex as the old V8. Repairing these requires L3 certified hybrid technicians, and those guys don't work for cheap. Data from 2025 shows that even minor impacts can compromise the battery casing, leading to a total loss designation on a car that looks perfectly fixable. The result? A staggering average premium of $2,850 a year. Number 13. Ford Expedition. The problem? The aluminum tax. Ford thought they were doing us a favor when they switched the Expedition to an all-aluminum body to save 300 pounds. While you save a few dollars at the pump, you're losing them to the insurance company. Aluminum requires specialized welding equipment and isolated repair bays to prevent cross-contamination with steel particles, which causes the metal to corrode. This means you can't just go to any local body shop, you must go to a Ford-certified collision center. Labor rates for aluminum repair are often 40% to 140% higher than traditional steel. Insurers know that a sideswipe in an Expedition isn't a $2,000 fix, it's an $8,000 overhaul. Expect to pay at least $2,600 a year just for the privilege of driving lightweight. Number 12. GMC Yukon. The problem? Parts harvesting and property damage. The Yukon is getting hit from two different directions. First, its size makes it a liability nightmare for property damage. But the second reason is much darker: the black market. Professional thieves aren't just stealing the whole Yukon anymore, they're harvesting it in your driveway. Those high-end Denali LED headlights, they retail for over $1,500 each. The 22-inch factory wheels? Top dollar on eBay. Thieves can strip the front end of a Yukon in under 5 minutes. Every time someone files a claim for stolen eyes, the comprehensive premiums for every other Yukon owner go up. National averages are sitting around $2,582, but if you live in New Jersey or New York, you're looking at $3,500 plus. Number 11. Kia Optima. The problem? the ghost of TikTok. Even though the Optima was replaced by the K5, the insurance world hasn't forgotten the Kia Boys era. This generation of Optima famously lacked electronic engine immobilizers, a $50 part Kia skipped to save money. Even if you've had the software update, insurers still see these cars as theft bait. In urban markets, some major insurance companies are outright refusing to write new policies for these model years. If you can get coverage, you're paying a stupidity tax for Kia's manufacturing shortcut. You're looking at $2,595 a year for a car that's nearly a decade old. That is luxury car pricing for a used sedan. Number 10. Hyundai Sonata. The problem? Systemic brand risk. The Sonata has the same theft issues as the Optima, but it's actually worse because the theft rates for the 2024 models are still high despite having the new tech. In 2024 alone, over 26,700 Sonatas were stolen nationwide. Here's the scary part. Even if you buy a brand new 2024-2025 Sonata with every anti-theft feature imaginable, your premium is still elevated. Why? Because insurance companies price by portfolio. If the 2018 Sonatas are being stolen at record rates, the insurance company views the entire Sonata nameplate as a higher risk. You are literally paying for the sins of the older models. Average annual premium, $2,639. We're just getting started. If you think a $2,600 premium is bad, wait until you see what happens when you combine electric vehicle tech with performance parts. Coming up next, we're looking at the two EVs that are being totaled for the price of a laptop and the Dodge that is 60 times more likely to disappear from your driveway. We are now entering the territory where insurance companies stop just charging you more and start treating your vehicle like a ticking time bomb. From cars that are statistically more likely to injure you to EVs that are being totaled by a single pothole, these next 6 models are the reason your monthly premium feels like a second mortgage. Number 9. Kia Telluride. The problem? Sensor saturation and guilt by association. The Telluride is the darling of the family sub-UV world, but it has a technology problem that's driving premiums into the $2,600 plus range. This car is packed with advanced driver assistance systems, or ADAS. We're talking about radar sensors hidden in the bumpers, cameras in the mirrors, and ultrasonic sensors every 6 inches. In a standard car, a parking lot tap is a buff-out job. In a Telluride, that same tap can misalign a 360-degree camera system that requires a specialized alignment rack to recalibrate. That's an extra $1,200 in labor before you even touch the paint. But there's a second, hidden factor: the Kia badge. Even though the Telluride usually has a push-button start and isn't a target for the Kia Boys, insurance companies often apply a brand-wide risk adjustment. You're effectively paying a premium because your car's cousins are being stolen at record rates. Number 8. Nissan Altima. The problem? The medical liability factor. This is where the data gets dark. According to the latest IIHS and HLDI loss reports, the Nissan Altima has disproportionately high injury loss indices. It's currently ranked nearly 100% above average for medical payment claims. Why? It's a combination of 2 things: the driver demographic and a specific safety flaw revealed in 2025 testing. The latest IIHS moderate overlap tests showed that in certain impacts, the rear passenger's lap belt can move from the pelvis onto the abdomen, significantly increasing the risk of internal injuries. When people get hurt, hospital bills explode. Insurance companies don't just insure the metal, they insure the human inside. Because Altima accidents lead to higher medical payouts, you're looking at a premium of $2,685 a year. Number 7. Tesla Model 3. The problem? The parts monopoly. The Model 3 is one of the most efficient cars ever made, but it's an insurance nightmare because of repair severity. Tesla tightly controls their parts supply chain. You can't just buy an aftermarket fender from a third-party supplier. It has to come from Tesla. Certified Tesla body shops are often backlogged for months, and because of the aluminum-intensive construction, repair costs are roughly double the industry average. A minor rear-end collision that would cost $3,000 on a BMW can easily hit $12,000 on a Tesla. Insurers know that every claim is going to be severe, so they hit Model 3 owners with an average annual premium of $2,780.
Number 6. Tesla Model Y. The problem? Structural totaling by design. Take everything we just said about the Model 3 and crank it up. The Model Y uses gigacasting, massive single-piece structural components for the front and rear of the car. While this makes the car cheaper for Tesla to build, it makes it nearly impossible to partially repair. If you damage the rear casting in a collision, you can't just weld in a new section. In many cases, the entire car is declared a total loss because the cost of replacing the structural frame exceeds the car's value. You're not just insuring a car, you're insuring a $50,000 smartphone that can't be fixed if the screen cracks. National averages for the Model Y are pushing $2,900, and in high-cost states like Florida, owners are reporting quotes as high as $4,500. Number 5. Dodge Charger. The problem, the Hellcat multiplier. If you own a Dodge Charger, especially a Hemi or a Hellcat, you are driving the most stolen car in American history. Recent data shows that Hellcats are 61 times more likely to be stolen than the average vehicle. This isn't just joyriding, it's professional theft rings targeting the high-value engines and transmissions. Because of this, comprehensive coverage, the part of your insurance that covers theft, is astronomical. Even if you live in a gated community and have a spotless record, you are paying the Dodge tax because of the sheer volume of claims across the country. You are looking at a $2,700 baseline, but for younger drivers, that number can easily double. Number 4. Hyundai Elantra. The problem? America's most stolen car first half of 2025. As we hit number 4, we encounter the absolute king of the Kia Boys epidemic. In the first half of 2025 alone, over 11,329 Hyundai Elantras were stolen. That's nearly 4% of all vehicle thefts in the United States. The 2017 to 2020 models are the most vulnerable because they lack basic engine immobilizers. Thieves can start these cars in 30 seconds with nothing but a USB cable. Major insurers like State Farm and Progressive have officially blacklisted these models in certain zip codes, refusing to issue new policies entirely. If you own an Elantra, you're essentially driving a car that the insurance industry wants off the road. Average cost? $2,790 a year, if you can even find someone to cover you. We've covered the theft kings and the repair nightmares, but we haven't reached the top 3. Coming up next, we're looking at a 9,000-pound beast that insurance companies call a physics experiment, a family SUV with a hidden safety secret, and the #1 truck that combines every single risk factor on this list into one massive $3,500 a year bill. These aren't just expensive to insure, they are vehicles that change the way insurance companies calculate risk itself. We're talking about the models that hit the perfect storm of high-speed performance, specialized parts, and massive liability. Number 3. Hyundai Palisade. The problem? The rear seat safety gap. Coming in at number 3 is the Hyundai Palisade. This one catches most owners off guard because it's marketed as the ultimate safe family hauler. However, in late 2024 and throughout 2025, the insurance industry reacted heavily to updated IIHS crash data. In the updated Moderate Overlap Front 2.0 test, researchers found a critical flaw. In a collision, the rear passenger's lap belt could move from the pelvis onto the abdomen, significantly increasing the risk of internal organ injuries. While Hyundai has scrambled to add load limiters and pre-tensioners to the 2026 models, the millions of Palisades already on the road are now flagged for high personal injury protection or PIP risk. Combine that with the calligraphy trim's ultrasonic sensors and Nappa leather interiors, which cost a fortune to replace after even a minor fender bender, and you're looking at a national average of $3,100 a year. In cities like LA or Miami, that number is clearing $4,000. Number 2.
GMC Hummer EV. The problem, the 9,000-pound physics tax. The Hummer EV is a marvel of engineering, but it's an absolute disaster for your insurance agent. This vehicle weighs over 9,000 pounds. For context, that is the weight of 3 Honda Civics. From an insurance perspective, this creates two massive problems. First, property damage liability. If you lose control of a 4.5-ton vehicle and hit a brick wall, a parked car, or a storefront, you weren't just denting it, you were demolishing it. The payout limits on standard policies often aren't enough to cover the damage a Hummer EV can do, forcing owners into high-limit, high-premium territory. Second, the battery death sentence. The Hummer's 200-plus kilowatt-hour battery pack is the single most expensive component in the EV world, with replacement costs estimated between $30,000 and $50,000. Because the battery is structural, even minor frame damage can compromise the entire pack. Insurers are finding it cheaper to total the entire $110,000 vehicle rather than risk a battery fire or a complex repair. Expect an annual bill of $3,200 just for the baseline no-accident coverage. Number 1. Ram 1500. The problem, the king of the black market. At the top of the Torque Hub Blacklist is the Ram 1500, with the TRX and Rebel trims leading the charge. This truck is the grand slam of insurance risks. First, you have the performance risk. The TRX features a 702-horsepower supercharged Hellcat V8. Insurance companies have decades of data that shows high-horsepower trucks are involved in high-speed, high-impact collisions more often than any other segment. Second, you have the theft epidemic. Sophisticated theft rings are currently targeting the TRX at a rate that has surpassed almost every other vehicle in the US. These trucks aren't being stolen for joyrides, they're being stripped for their Hellcat engines and specialized Bilstein Blackhawk E2 suspension systems, which can sell for $10,000 plus on the black market. Third, the repair cost. A single damaged suspension component on a TRX can cost more than an entire used sedan. When you combine high-speed crash data, a #1 ranking in theft, and luxury-tier repair labor, you get the most expensive mainstream vehicle to insure in America. The national average? $3,500 a year. And if you live in Louisiana, Michigan, or Florida, what we call the insurance triangle of death, you could easily be looking at $5,000 to $6,000 a year.
So, what do you do if you own one of these or you're planning to buy one? You don't have to just accept these rates. 1. Check the insurance group. Before you buy, call your agent with the VIN. Don't wait until the car is in your driveway. 2. The 5% discount. Ask about telematics or safe driver apps. Yes, they track your data, but for a Ram TRX or a Tesla Model Y, that 5 to 10% discount could save you $500 a year. 3. The excluded state warning. If you live in a state with no-fault insurance, like Michigan, your rates on these 15 models will always be higher. Consider a model from a lower-risk brand like Mazda or Subaru to offset the cost. That's the wrap on today's Torque Hub investigation. Did your car make the list? Check your last insurance bill and drop your monthly payment and your state in the comments below. Let's see who's getting hit with the highest performance tax in the hub. If you found this data drop valuable, hit that like button and subscribe. We're deep diving into the 2026 hidden gems, the cars that are actually getting cheaper to insure in our next video. You won't want to miss it.